Welcome to The Explainer. So, what is the deal with Meta's stock? Is it about to take off, or is it just running out of steam? Today, we're going to decode the technical signals and see what the data is telling us about one of the market's biggest players.
Well, let's start with this number, $738.36. That's where Meta closed on October 24th. But, a single price is just one frame in a much larger movie. It doesn't tell us where the story is going. So, are we looking at a bullish run? A bearish downturn? Or is it just stuck? To figure that out, we're going to dig into a detailed technical analysis report and let the numbers do the talking. So for the next few minutes, let's put Meta on the exam table. We're going to check its vital signs, things like price and trading volume, to get a real sense of its current health.
All right, let's dive right in, starting with the report's main conclusion. What's the big picture trend here? And bam! Right out of the gate, we get our first major clue. The report calls it cautiously optimistic. A score just a little over 50? Think of it like a slight nod from the market. It's not a roaring cheer, but it's a definite hint that things are leaning positive.
Okay, so to really understand that quiet optimism, we need to rewind a bit. Let's see what the price and volume have actually been doing lately. Man, this stock has been on quite a ride. I mean, it clawed its way back from lows around 683, smashed into a ceiling near 780, and since then, it's kind of settled into this holding pattern, but one that's still gently pointing up. Now, if we zoom in on just the last 10 days of trading, the report points out something really important. The overall volume has been a little sleepy, sure, but look at those spikes of activity when things get choppy. That tells us there's high liquidity, which means there are always plenty of buyers and sellers ready to jump in.
Okay, now we're going to pop the hood and look at one of the most fundamental tools in technical analysis, moving averages. These really help us see the trend through all the daily noise.
You can kind of think of this as the stock's financial pulse. If that average is trending up, it signals some real underlying strength. If it's falling, well, that suggests some weakness. And this is where the story gets really interesting. Look at this. Meta's current price is above its short-term and its long-term averages. That's a fantastic sign of recent strength and a solid long-term foundation. But see that one in the middle, the 50-day average? The price is currently trading below it, and that's acting like a ceiling the stock needs to break through.
So, this right here is the core tension for Meta at this very moment. It's got this solid foundation, but it's bumping its head against a very real near-term challenge. The long-term trend is looking healthy, but right now, it's hitting a wall.
All right, let's get into the more advanced vital signs. This is where we start to see some really fascinating and sometimes completely conflicting signals coming from the market. And here it is, the dashboard of indicators. It's pretty clear that not all the lights are green. We've got this mix of bullish, bearish, and neutral signals all firing at once. It's a classic sign of a market that just can't make up its mind. Just look at this, for example. Two super popular indicators are telling completely different stories. The MACD, which is all about the trend, is flashing bearish. But at the exact same time, the momentum indicator is flashing bullish. It's a classic tug of war between different forces in the market. Now, there's another really important condition the report flags: overbought. Think of it like a sprinter who just ran a 100-meter dash. They're not weak, not at all. They need to catch their breath before they can run again. And it's not just one signal. A whole bunch of these key indicators, things like stochastics and the CCI, are all flashing the same overbought warning. This suggests that the recent rally might be losing some of its gas, and the stock may need to just pause and chill for a bit before making its next big move. So, with all this conflicting data, the cautious trend, the indicator tug of war, the overbought signals, what on earth could happen next? Well, the report takes all of this and synthesizes it into 3 potential scenarios. The report basically boils it all down to 3 possible roads ahead. If it breaks above that recent high, the bulls could really take charge. If it stays stuck in this tight range, we're looking at more consolidation. But if it falls below that support level, well, that could hand control right over to the bears. The market is truly at a crossroads. So, after digging through all those charts and numbers, what's the bottom line? What should we really walk away with from all this? This quote from the report just perfectly nails it. The stock is in this delicate balance. It probably needs a short-term breather, but its long-term foundation suggests there's still real upside potential.
So, what does this all mean for you? Well, the market is basically in a state of equilibrium, just holding its breath. Neither the bulls nor the bears are fully in control. The real action is going to start when the stock finally breaks out of its current range, one way or the other.
And if you want to see that visually, here you go. When you weigh all the evidence from this report, the scales do tip. Just a little bit. The bullish and neutral factors combined definitely outweigh the bearish arguments right now. It tilts the odds in favor of the upside, but hey, it's by no means a sure thing.
And that leaves us with the multi-billion-dollar question, doesn't it? What's going to be the catalyst? Will it be an earnings report, a new product announcement, or just a big shift in market mood? The data has set the stage. Now everyone is just waiting for the trigger.